Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a deep dive into US President Trump's plan to impose a 50% tariff on all copper imports and which ASX stocks to watch. US copper prices spiked to record highs in the aftermath of US President Trump's announcement to impose a 50% tariff on all copper imports from the 1st of August. Prices of copper had already spiked 25% this year amid stockpiling after President Trump announced an investigation into potential tariffs on copper back in February. However, traders were anticipating a smaller 25% tariff.
I think these premiums might widen to 25% or even 30% as people try to capitalize and really push the importing system before these 50% tariffs come in. As I said, they import roughly 850,000 tons per year. They use roughly 1.6 million tons per year. So no matter how much they import now, they're going to run out at some point over the next 3 years.
Away from the diversified big producers like BHP, Rio Tinto and South32, there are a number of smaller pure-play copper miners listed on the ASX. Sandfire Resources has outperformed BHP with a near 20% rise year-to-date versus BHP's flat return. Shares appear to be in a long-term uptrend as confirmed by multiple indicators on ASX TradeWatch data, and most analysts suggest holding Sandfire at current levels with the average price target of $11.16 only 1% off current prices. Capstone Copper hasn't performed as well as Sandfire year-to-date, but many analysts are upbeat about the outlook for the mid-tier producer, which is engaged in the production and exploration of copper in the US, Mexico and Chile. It is a dual-listed company with its primary listing on the Toronto Stock Exchange.
You look at the rates of production increases coming out of Capstone Copper, it's about 25 to 30%, where production increases for Sandfire is about 15%. And then also the mine life for the different mines that Capstone Copper has is 25 years and then 19 years for their San Domingo mine. Whereas you look at something like Sandfire, the mine lives are much shorter. For instance, the Matheo mine is expected to wrap up by FY 2030. They do have another resource in Matza, which has a slightly longer mine life. But when we look at all those dynamics, we just feel that there's far better relative value on offer in something like Capstone than there is in Sandfire at the moment.
Well, Mac Copper is another dual-listed stock based in New Jersey. It operates the CSA copper mine in Cobar, New South Wales.
It is smaller, but the thing is, in terms of market cap, it is quite reasonable. So the market cap is only 710 million market cap, but their revenue is 336 million, all in copper. I think it's 98%. So even smaller tailings than CSC. Yeah, so it is quite small in comparison, but the thing is, it is a pure copper exposure. And the great thing is that the actual mine is here in New South Wales. It's out in Cobar. They do 40,000 tons per year of copper production and employs 500 people. So if you want to support local, it is one to keep an eye on.
The average broker recommendation on Mac Copper is a buy, according to Refinitiv, with a price target closer to $20, suggesting it can rally a further 9%. ASX TradeWatch data show the stock is in a strong bullish trend with the 5-day moving average above the 50-day and both the 20 and 200-day moving higher. Well, gaining exposure to copper via ETFs is another option for investors. Global X's Copper Miners ETF Wire, the only Australia-listed ETF offering exposure to copper miners, has seen a surge in investor interest since Liberation Day.
That's one way that investors are capitalizing on this copper price move. I also think that it's important that you are gaining exposure in this diversified way because of the current geopolitical risk. Like if you had invested in copper miners in Chile or Canada, you'd perhaps be in a quite bad space right now.
Global manufacturing leaders are urgently seeking clarity on Trump's tariff policy ahead of the planned 50% levy on copper imports as their inventories dwindle and deadlines for existing contracts approach. Analysts have warned that permanently elevated copper tariffs could significantly impact prices and demand, given the metal's critical role in electric vehicles, semiconductors, and defense systems. However, there's also a chance that this is another example of the so-called taco trade, where President Trump reverses course ahead of the upcoming deadline.
It's like Trump almost made up that 50% number on the spot. So the copper futures reacted, but the actual miners themselves, the response has been a little bit muted because, as we have seen, the market's kind of, how can I say, they're wary of whenever Trump makes these big sort of statements, how it actually, the market reacts is a little bit more muted nowadays. It's the reaction isn't as swift.
And that is your IG macro intelligence for this week. We'll see you next week.